Guys? I hope everybody's doing great. Um, just wanted to make this quick video to show you how I trade kind of during this crazy coronavirus bear market, right? And there are many different strategies for traders, and I see a lot of people are trading the S&P 500. For those of you who don't know, SPY is the S&P 500 index pretty much. I mean, it's a proxy for the S&P 500, and if we're looking where we're at right now, you can see that we're in this trading range between 256 or something like that. It's 257 and 238, and I believe basically what's happening is that we are in the bear market. Don't get me wrong, we are in the bear market, but right now there's a lot of confusion where people don't really understand what to do here, right? As you can see, we had a downward movement, then we had a pullback, then we had another strong downward movement, then we had a pullback, and a lot of people expected we would have a similar downward movement down to the downside, potentially breaking this support area over here. But notice what happens. We're actually trading sideways, kind of consolidating, and some people are saying that here's the bottom, the 220 was the bottom, and from now on it's all going to be just going up. And some people are saying, oh no, this is the dead cat bounce, so we're actually going to be going down. So there's a lot of confusion, and this is a very interesting situation because what do you do, right? At this point, you have to kind of make your call and kind of try to understand if it's going to go up or down from here. I personally believe what happened is that obviously we got the news that there was a coronavirus outbreak in Italy, which is a manufacturing hub, along with China. So there was a lot of panic, right? People started panicking. They realized the coronavirus was a serious issue. It was going to seriously impact the economy. So we had this downward movement. Then we had a pullback. We had another downward movement. And this is the time where we got the stimulus package passed by the Congress, by the US government. So effectively, they readjusted the risk, right? Instead of everyone freaking out, the companies can go bankrupt and something crazy is going to happen. Everyone realized nobody's going bankrupt, and we're kind of consolidating this area. So the market priced in the recession and they priced in the risk, and right now we're kind of trading in this range, right? As you can see, guys, on a weekly chart, here's the original support level that now became resistance, and I believe we're going to be potentially could be trading in between this support and resistance kind of channel. So we're going to create a channel here, and you might go sideways for a while. Before something happens, before there's some kind of news that's going to bring us down again, right? For example, and I'm going to touch on this more, but for now I just wanted to tell you, how do I trade in this environment? How do you trade when there's something like this going on, where it's going sideways? And don't get me wrong, guys, I still believe we're in the bear market. If you look at the trend line, we have developed a trend line here, and unless we break through this trend line, we are in the bear market. As far as I'm concerned, we're going down, right? I would say there's about 60 to 70% chance that we're going to be going down. There's about 40 to 60 to 50% chance we're going to be going up. So it's about 50-50, but I'm slightly bearish right now. So, but at the same time, I would be scared to short right now because looking at the price action of the candlesticks, I'm not really sure if we're bearish or we're bullish. It seems like we're somewhere in between. So my strategy is a little bit different. And also another reason why I think we're bearish is because if you look at the price action, for those of you who don't know, this is a Buffett indicator, which is the best way to understand what the stock market valuation is at the moment. As you can see, it's 113.8% of GDP, which is absolutely crazy because technically we're in a recession, and as you can see during 2000 crash, we went all the way down to 74% of GDP, and in 2008 it went all the way down to 57% GDP. So now, considering that we're in potentially a serious recession, we're way overvalued. You have to pay $1.13 for, or compared to the historical average, which is still very expensive. So uh, I would not be investing long term right now, and I could be wrong, but this is my kind of logic. Tell me in the comments what you think. So I assume we're bearish, but at the same time, I would like to hedge myself, right? I'm afraid to just short S&P 500 because what if some news comes out tomorrow, we're actually going to go up and we're going to break this trend line? That would be very risky because that would put us into the bullish phase potentially, and I could lose a lot of money. So what I did, I actually shorted a lot of uh, a lot of stocks from the entertainment, hospitality, and pretty much restaurants, pretty much all the stocks that are in the dangerous category, right? So you can see there's Boeing in there, there's cruise liners, there's Expedia, basically all the side. Oh, and then travel stocks, right? Everything that has to do hospitality, travel, and entertainment. So I decided to short all these stocks. As you can see, so far it has been working pretty well for me. I'm up over $1,000, and even though I'm not really sure what's going to happen here, what I do know is that these stocks are highly unlikely to go up in the near future unless we see some kind of improvement here. You see this number? Just imagine what we're seeing over here, guys. This is just a symptom. This is a symptom of the problem. It's just imagine like you have, cancer, and you have, pain and fatigue. The pain and the fatigue is not the actual problem, right? The core of the problem is the cancer, right? So what is the cancer for these stocks over here? What's causing the problem right now for these stocks? And in my opinion, the problem is this number. It's the coronavirus, right? So as long as this number keeps going up, and you can see the exponential line here, you can look at logarithmic, but you can see this kind of like a hockey stick, right? And as long as you see these increases going up, especially in the United States, look where it's over 300,000 already. I do not believe that these stocks can go up, right? I mean, they might go up slightly, but it's very unlikely that we'll lose a lot of money in this position as long as this number keeps going up. So in this way, I can hedge myself, right? I can hedge my risk knowing that the actual problem, the core of the problem, the cancer of this stock market is still alive and is still growing. And as long as it keeps growing and as long as we don't cure this problem over here, I'm pretty safe with my investments over here, right? With my trade over here. Now, so far I'm 16% up, and I think I made this trade a few days ago. Again, this is my logic. As long as this number keeps going up, I'm probably bearish, and I will keep my positions over here. So even if tomorrow we get some kind of news that's gonna say, oh, oil prices like Russia and Saudi Arabia, they cut a deal, and the oil prices for now is gonna skyrocket, right? This probably is not gonna affect. This might affect the S&P 500. It's gonna break this trend line. It's gonna go up, but it's unlikely to affect these stocks over here because they are affected primarily not by oil, not by the economy, but they're affected by this. And as long as this thing keeps going up, I should feel pretty safe holding these positions. Again, I could be wrong. Again, I'm just learning this stuff, and as you can see, I'm using simulated trading, right? So I'm never ever trade until you completely confident in your ability, your understanding of the stock markets. I've been trading for a few months now, and I'm using logic. I'm trying to use logic to understand, to hedge my positions in a time when we're pretty much here in the uncertainty and we don't really know if it's going to go up or it's going to go down, right? So just wanted to share with you this quick video. Let me know in the comments below what you think about this strategy, if it makes sense to you, and make sure to like this video if you enjoy this video. It's my first video on the stock market and on trading in general. So if you really liked it, make sure to hit the like button, and you can subscribe too if you want to. Thanks a lot for watching, and I hope I'll see you next time. Bye bye.